What's up, everyone? Guy here, Minority Thinker. Welcome to my channel. Hope you all doing well today. It's Friday, May 27th, 2022. Now, I just want to get straight to the point. Let's take a look at the headlines, okay? Search inflation. I put in a search inflation. As you can see, scroll down here. How bad can inflation get? This past months has been just inflation. America's inflation crisis grows. How inflation affecting you? It's just massive inflations. Massive amount of talks about inflation and inflation's up 7.9 peak February compared to last year. So, saw inflation, and some talking heads also talking about hyperinflation, which is crazy. Okay, guys, I'm here to tell you, and you don't have to take my words for it. Inflation and the talk of hyperinflations now got mixed into politics, the blame game. They are playing with you guys. Okay. Now, before I go on, explain my reasoning and some of the nuggets that I found from some of the guys that are smarter than me and do a lot of research on it, is that they're misleading you on inflation, and some talking heads just opinionated on hyperinflation. And I think the reason being is politically motivated. This is not about politics, not political. Now you got the Democrats, the Biden side, blaming on price gouging of the oil company that's price gouging, and then you got the Republicans saying that money printing, fiscal irresponsibility creates this inflation, and the mix in between, and somehow that is linked to, and that money printing is right now. Both are correct and both are wrong at the same time. They're not telling you the whole story of the inflation, or not the lack thereof of inflation. Okay, guys, this is all scare tactic mongering and to shift attention from the real issues. Now, the real issues is that, guys, since 2008, if you look at this is EIA chart here of gas and gas prices here for the past 20 years. Gas prices dropped since 2008 market crash. Gas prices has been decimated since the glute of 2008, and down low at close to under $2 when Trump took office, and has since until 2020. That's when Biden took office. Okay, guys. So with this time frame, the oil industry has been decimated. Okay, and you know why it's been decimated? Because of the infrastructure. Okay, the open of the North American oil independence. Okay, let's take a look at this article here, and it touched on it a little bit. Okay. After oil prices tank in 2014-15, the U.S. national average price of gasoline reached near an early 1916 low of $1.72 a gallon. Okay. An organization of petroleum export country linked up with Russia to contain oil production, which has outstripped demand as U.S. production rose to 9 million barrels per day in 2016 from 5 million in 2008. Daily worldwide demand now is about 100 million barrels per report. The production limits by OPEC plus bloc let prices rise slightly during Trump's pre-COVID presidencies, even as U.S. crude production kept rising and peaked at 13 billion barrels in 2019. Gas prices, which an average 2.3 at Trump inauguration, stayed between 2000 until COVID sent them plunging down to $1.77. That pushed U.S. oil drillers to finally cut production back to 9.8 million barrels per day by February 2021. So there you have some of the stories there, guys. So these are the nuggets you need to find out, okay? So basically, we're doing Trump presidency, and what lead up to that is 2008, 2016, is that productions of the U.S. crude production rises and compete with OPEC. OPEC is the monopoly of the oil kingpin. They control the price. Now they have US as competitions. We're able to keep, we don't answer to them because of policies of what Trump has put in place. That we basically increase production. There's massive amount of crude oil. So basically supply and demand, the law of supply and demand. We put out a lot of supply and price generally goes down. So that's what happened. And guess what happened? And once Biden took office, he stopped the US productions, or at least limits to the productions of the US crude oil, and go back into OPEC. And that basically back into the good old day of Bush ish, so that you have it in a company that pushed the price up. It has nothing to do with US printing money. It has everything to do with oil. As you can see that by, let's take a look at US dollar index, guys. It at a 10-year high. Actually, let's take a look at even longer. Okay. Almost a 20 years high. Dollar is the most highly sought after. And we'll be wondering why. Why is it, if it's inflation, why isn't the US dollar tanking? Why isn't there hyperinflation? Because we're printing so much money. That is misleading, guys. US dollar is at its highest in demand in almost 20 years. Okay? They are not telling you the story. And you got a lot of talking heads saying that money printing. So don't give, folks, don't give folks money, don't give folks this, don't give folks that, because it will create hyperinflation. And that is not true. Money printing since 2008. And if you look at this, 2008, 72, the index is 72. It actually went up. Okay? So that proves that money printing or bond repurchasing, there's not actual money printing, but bond repurchasing by the company, by the government, and not even inflation. So I'm not sure why I'm talking high inflation. Now the worry here is, so you might want to, ask, what about gas prices? Yeah, prices go up, yes, but it was up in 2006, 2008 as well. Um, just because price gas price go up does not mean other products going up. So it's not across the board. Inflation is only on oil. Oil prices. And oil prices affect what? Transportation. Transportation most of the time will affect what? Carrying groceries. So they just, and a slew of other things. And that's why it translates to some of the grocery prices that can also go up to as well. So it's not across the board. There's items or sectors that are actually price decreasing. Okay, so if you check out your clothing store, beauty products, vacation spots, hotels, that's decimated. Prices aren't going up that much. Okay, if even. So it's not across the board, and we know the reason already. I explained to you the reason is that the stop of the productions of the U.S. crude oil. Now the prices go up because they're not open that up. So now they basically handed the reign back into the monopoly, the cartel of the OPEC, and now they control the oil. They control the limits of how they're going to pump out, along with Russia. Created this dilemma. It created even more demand. Okay, and you might want to ask, let's take the CPI, but the CPI is at a 14% all-time high. Let me welcome you to who I follow quite some time now, but he has some good nuggets. This is Gata. He's he's the author of Atom, basically a thesis saying that technology is the single most deflationary that we have. So he went on and explained basically, I'll have a link in the description below, basically explaining that with the past 10 years, the inflation's numbers across the board is like this. Today, May 15 is 2.4 for the consumer price index across the board. Goldman Sachs and then 10-year treasury bonds are under the optimal threshold. It's not even at the threshold of 3%. It's actually under 3%. So, and he did calculations on actual numbers. I'll let him explain his calculation here, especially for the CPI, so people.
Here to consumer price index. And then among more formatting options, we choose the absolute value, and then 2-month, 3-month, 6-month, and 12-month values. Retrieve data. So to see the compound annual growth rate over 10 years, we do what we do every month, which is to take this number divided by the number exactly 10 years ago and see what the annualized growth rate between those numbers 10 years apart was. So to do that mathematically, we take this number, which is 289, divided by this number, which is 229, and we get this, which is 26% inflation over 10 years. Okay, 26% over 10 years. So what is it over 1 year? We take the 1/10th root of that. And I hope everyone understands the arithmetic here. X to the y power, x raised to y, 0.1. 1.0235. So to turn this into a percentage, we subtract 1, multiply by 100. 2.35%. You can even round it up to 2.4%. That is the 10-year compound annual growth rate of the US CPI. And no, the US CPI is not rigged or deliberately designed to understate inflation, as the other metrics that we talk about in this video will prove. That is the latest bogus meme that is going viral, but they all cite each other. The people who have this belief in what is frankly a flat earth belief are citing some bizarre metric that says that inflation is much higher than the CPI states because the CPI is continuously rigged to understate inflation. And these are people who actually categorize asset prices as inflation that is making people poorer, when asset price increases actually make people wealthier. So these are people who are way, way, way out of their league intellectually when they speak about inflation. So now we go to the next metric, which is the Goldman Sachs Commodity Index.
You hear that, guys? So the overall past 10 years, the CPIs, it's actually performing. The inflation of the CPI is actually underperforming the threshold of 3%. Although it's reaching there, it's only at 2.4%. So it's not at its peak threshold. Now, if at 3% or higher, then you can start talking about inflation. As of now, He just basically calculated for you. It's 2.4% across the board. Now, anybody can pick a arbitrary number or arbitrary sector and pound on it saying there's hyperinflation, etc., etc. But if you look across the board, it's not even at the 3% optimal threshold. Now, obviously, the Fed wanted to be at 2%, but now it's at 2.4. So it's where they wanted at, but yet now they're hawkish on slowing down the economy because they are listening to a lot of talking heads. That's very dangerous. Okay. You can follow him too as well. But I found an article here by CK Alpha. What's killing inflation? This is just 5 years ago. Technology is the biggest disinflationary force ever. That's all you have to know, guys. Do your own research on that. Find that's true or not. Basically, technologies increase efficiencies, increase productivities. Okay. So as you can see here, guys, 2008, 4.1. Okay, the U.S. per gallons per dollar per gallons. $4.3 per gallon in March. Now, if this number is going any higher, obviously supply and demand. The demand is going to wander off. It's going to kill the price. There is no shortage, guys. There is no shortage of oils. This is simply OPEC controlling the oil pricing. And I mentioned earlier about politics and both left and right talking about. It's not actually the oil companies that are gouging. I guess they're partially right, but it's actually not the company, but OPEC itself is the one that's controlling. But you let them control it by stopping the U.S. production. Energy independent. The supply, you stop North American from producing or limiting our productions, and you helping them to price gouge. And as far as on the right side about money printing, you got a lot of capitalists talking about printing money. We've been printing since 2008, and U.S. dollar index can only go up. One thing to remember is that we're not the only one that's printing money. Japan is printing money since 1980s, and their labor forces also go down too as well. And their money is not that deflationary or hyperinflationary, not even deflationary, and not even inflationary. I'm not sure about hyperinflation. The euro is printing. Major block is printing. China is printing. Everyone's of the major world of major countries are printing money. Okay, and the myths and a lot of folks coming out saying they're going to devalue the money to lower. So you got to go out and buy gold, buying these rocks to preserve your money. That is a lie, too, as well. It's like what Warren Buffett's saying. You buy gold, it's not doing anything. There's no utility in gold. Can't produce anything. Okay? But where I disagree with him is in the technology aspect of it. And the reason why these guys aren't talking about, like, Peter Schiff talking about gold all the time, is that they're not talking about technology advancement, guys. Take a look at this Seeking Alpha again. He has some good data in here. Look at this right here. Productivity and compensation. Information, massive amount of productivity, compensation. Look at that. We're an age of advancement, technology, robotic, automations, information. You look at Amazon. How is the world's biggest online retailer shipped you the next day and charge you very little for? That's the efficiencies in production, guys. It's actually cut down costs. When you cut down costs, less people working, cut down costs, you take out the inflationary aspect of it. So a lot of these talking heads not talking about technology advancement, which started in the 1990, advances in 2001. Okay, guys? In the future, that's why I'm still bullish on blockchain technology, and that's another technology that bring about efficiencies of transferring of digital asset. Okay, so don't. I mean, you can take my word for it. If not, it's up to you. But you should go out and do your own research. Don't listen. Listen with a filter for these talking heads about certain things that does not make sense, but they just push it anyway. You know, and what do I do from this information? That hyperinflation is a lie. Inflation is a far fetch. And now that people thinking, here's what people now flock to because of this push of inflation, push of hyperinflation. People flock toward gold. People flock toward silver. People flock toward certain things, commodities. If you look at gold and look at silver, it hasn't gone up. The US dollar hasn't depreciated. It's not a hedge inflation because there is no inflation to hedge against. Yeah, it could shoot up because of emotional buying, and now people are pushing to buy, a certain asset to hedge inflation. Now they push over the value of, say, real estate. Real estate right now, it's at a 30 to 40% overvalue because people thinking that, oh, this is my inflation hedge. I mean, if the overall inflation is only 2%, and they're mistaking saying that your dollar is depreciating over the year, so you put your money into, I can understand if it's say inflation is it's 20% year over year, and you buying real estate that overvalue at 20%. But when the actual number is not that, you're overpaying for commodity, overpaying for real estate, and frankly, you also use up your cash, which cash will be king once the market recess back into its pre pre-pandemic time. I truly think that's going to happen, unless obviously these major institutions start over leverage and fail, and then they'll bail them out before that happens. So we'll see how that's going to play out. But again, guys, listen, but with filters. Okay. All right. That's it. I'm out. Cheers.